Hi, we are in the fourth complete comprehensive example where we will be dealing with forfeiture and reissue of shares along with pro-rata allotment. So let's go to the example sum. Example sum. SK Limited invited applications for 3,20,000 equity shares of Rs 10 each at a premium of Rs 5 per share. The amount was payable as follows. On application Rs 3 per share including Rupee 1 premium. On allotment Rs 5 per share including Rs 2 premium. And on first and final call the balance amount. Applications for 4 lakh shares were received. Applications for 40,000 shares were rejected and the application money was refunded. Shares were allotted on pro-rata basis to the remaining applicants. Excess application money received with application was adjusted towards the sum due on allotment. G1 holding 800 shares failed to pay the allotment money and his shares were forfeited immediately. Afterwards, the final call was made. Ganesh, who had applied for 2,700 shares, failed to pay the final call. His shares were also forfeited. Out of the forfeited shares, 1,500 shares were reissued at Rs 8 per share fully paid up. The reissued shares included all the forfeited shares of G1. We are asked to pass the necessary journal entries for the above transactions in the books of the company. We'll begin with the working note 1, which is preparation of the 9-column table. On the bottom right corner, we will write the breakup. Application is 3 per share including Rupee 1 premium. So it's 2 plus 1. Allotment Rs 5 per share including Rupee 2 premium. So it's 3 plus 2. And the balancing figure is for the first and the final call. As per the question, the issue price of the share, its face value of Rs 10 plus a premium of Rs 5 per share. So it's 10 plus 5. Therefore, the final call amount, the balancing figure should be 5 plus 2. We'll go on to the 9-column table. The first column, category. Second column, number of shares applied. Third column, number of shares allotted. Fourth column, application money received. Fifth column, application transferred to share capital. Next, refund. Seventh column, allotment money due. Eighth column, excess application transferred to allotment. And the last column is bank to allotment. The company has received applications for 4 lakh shares. So the total of the number of shares applied column should be 4 lakh. And the company has invited applications for 3,20,000 equity shares, which means the total of the number of shares allotted column should be 3,20,000 equity shares. Further, the second sentence over here says applications for 40,000 shares were rejected. So in category A, against 40,000 shares applied for, no allotment was made. And shares were allotted on pro-rata basis to the remaining applicants. So in the second category B is the balancing figure, 3,60,000 shares applied, for which 3,20,000 shares are allotted. We'll complete the table. We'll finish category A first. Application money received 40,000 shares applied multiplied by 3 rupees per share payable on application. 1,20,000 rupees. There will be no money transferred to share capital. The entire amount has to be refunded, 1,20,000, and all the other columns are nil. We'll move on to the category B. Application money received 3,60,000 shares applied for multiplied by the application money of 3 rupees per share, 10,80,000 rupees. The application money which is transferred to share capital, 3,20,000 shares allotted multiplied by 3 rupees per share comes up to 9,60,000 rupees. We'll come back to the refund column. The allotment money due, 3,20,000 shares allotted multiplied by 5 rupees per share payable on allotment, 16 lakh rupees. The excess application to be transferred to allotment is the difference between the application money received and the application transferred to share capital. In this case, 10,80,000 rupees minus 9,60,000 rupees comes up to 1,20,000 rupees. And the bank to allotment column is 16 lakh minus 1,20,000, which is 14,80,000 rupees. Let's total up the columns. The total of application money received column is 12 lakh rupees. Total of application money transferred to share capital column, 9,60,000 rupees. The total of the refund column, 1,20,000 rupees. Total of allotment money due column, 16 lakh rupees. The total of excess application transferred to allotment column, 1,20,000 rupees, and the total of bank to allotment column is 40,80,000 rupees. So we've completed the first working note, which is the preparation of the 9-column table. Let's move on to the second working note. The second working note is details with respect to G1's 800 shares. Details with respect to G1's 800 shares. He holds these shares, so it's shares allotted. And since shares have been allotted, he belongs to the B category. As per the question, G1 failed to pay the allotment money and his shares were forfeited immediately. So first let's find out the allotment money. Not paid by G1. The two columns we will take is the number of shares allotted column and the bank to allotment column. In category B, the number of shares allotted is 3,20,000 shares, for which we need to receive rupees 14,80,000. Now in the case of G1's 800 shares, the amount payable by G1 is 800 multiplied by 14,80,000 divided by 3,20,000. Comes up to rupees 3,700. So the allotment money not paid by G1 is rupees 3,700. Next, we need to calculate the amount paid by G1. G1 has paid the application money. So we need to take the two columns as number of shares allotted and the application money received. Now in the B category, against 3,20,000 shares allotted, the application money received is 10,80,000 rupees. So against 3,20,000 shares, the amount of application money received is 10,80,000 rupees. Therefore, in the case of G1's 800 shares, application money which is paid by G1 would be 800 multiplied by 10,80,000 divided by 3,20,000 rupees. Comes up to rupees 2,700. Now this is the amount paid by G1 including the premium payable on application. Now the reason we are finding out the amount to be paid by G1 is so that we can enter the amount in the forfeiture journal entry against the account share forfeiture account, which will represent the amount received from the defaulting shareholder. But however, this amount should exclude any premium received. So we need to deduct the premium amount. So it's 2,700 minus the premium amount is 1 payable on application. So on 800 shares, the amount of premium will be 800 into 1. So it's 2,700 minus 800, which comes up to 1,900 rupees. So we've completed the working note 2, which is details with respect to G1's 800 shares. We've ascertained that the amount of allotment money not paid by G1 is 3,700 rupees, and the amount which is paid by G1, which excludes the premium amount, this amount is 1,900 rupees. Let's move on to the third working note. Working note 3, details with respect to Ganesh, 2,700 shares, says who had applied for. So applied, and Ganesh also belongs to the B category. First, let's find out the number of shares allotted to Ganesh. We need to take the two columns as the number of shares applied column and the number of shares allotted column. And in the B category, against 3,60,000 shares applied for, number of shares allotted is 3,20,000 shares. So against 3,60,000 shares, the number of shares allotted is 3,20,000 shares, and therefore for 2,700 shares applied by Ganesh, the number of shares allotted will be 2,700 multiplied by 3,20,000 divided by 3,60,000. Comes up to 2,400 shares. So the number of shares allotted to Ganesh will be 2,400 shares. Next, let's calculate the final call not paid by Ganesh. Final call money not paid by Ganesh is equal to 2,400 shares multiplied by the final call money, and the final call money is 5 plus 2 rupees premium, total of 7 rupees. So multiplied by rupees 7, which comes up to 16,800 rupees. And the amount which is received from Ganesh is 2,400 shares. This should exclude the premium. It's 2,400 shares multiplied by the total of the application and allotment money which is paid by him, excluding the premium, which is 2 plus 3 rupees, 5 rupees. And this comes up to 12,000 rupees. So we've completed the third working note, which is details with respect to Ganesh 2,700 shares applied for. The number of shares allotted to Ganesh will be 2,400 shares. The final call money not paid by him is rupees 16,800, and the amount which is paid by him, that is received by the company from Ganesh, excluding premium, is rupees 12,000. Let's move on to the solution. In the books of SK Limited journal, we have date / serial number, particulars, LF number, debit rupees and credit rupees. First entry is for the application money received. Bank account debit to equity share application account for the application money received. This is the total of the fourth column, comes up to 12 lakh rupees. The second entry is for the utilization of the application money, equity share application account debit, 12 lakh rupees, the amount of the first journal entry, to equity share capital account the amount of the application money towards equity share capital, which is 3,20,000 shares multiplied by rupees 2 per share, comes up to 6,40,000 rupees. To securities premium reserve account, the amount of the application money towards securities premium, which is rupees 1 per share on application, comes up to 3,20,000 rupees. To bank account for the amount which has been refunded, which is the total of the 6th column, 1,20,000 rupees, and to equity share allotment account, this is the amount of the 8th column, 1,20,000 rupees. Narration: application money utilized and excess refunded. We need to check if the total of the debit is equal to the total of the credit. The total of the credit 6,40,000 plus 3,20,000 plus 1,20,000 plus another 1,20,000 comes up to 12 lakh rupees. The third entry is for making the allotment money due. Equity share allotment account debit, to equity share capital account, to securities premium reserve account for the allotment money due. The amount to be written against equity share allotment account is the amount of the 7th column, the allotment money due, 16 lakh rupees. Against equity share capital account, we will write 3,20,000 shares multiplied by the allotment money towards share capital, which is rupees 3 per share, comes up to 9,60,000 rupees. And against security premium reserve, we will write 3,20,000 shares multiplied by rupees 2 per share premium payable on allotment, which is 6,40,000 rupees. The fourth entry is for the receipt of the allotment money. Bank account debit to equity share allotment account. The question does not ask us to open a calls and arrears account, so we will not open it. This is for the allotment money received. The amount to be written against equity share allotment and the bank account is the amount of the 9th column, 14,80,000, minus the amount of allotment money which is not paid by G1, which as per our calculation is 3,700 rupees. So we have the amount as 14,76,300 rupees. The fifth entry, we'll forfeit G1's 800 shares, equity, share, capital account debit, the allotment premium has not been paid by G1, so we will debit security premium reserve account to share forfeiture account to equity share allotment account. This is for 800 shares of G1 forfeited for non-payment of allotment money. The amount to be written against equity share capital account is the number of shares forfeited, which is 800 shares, multiplied by the amount which is called up to the time of the forfeiture excluding premium, which is 2 rupees on application plus 3 rupees on allotment, comes up to rupees 5 per share. Total 4,000 rupees. The premium not paid by G1 is 800 shares multiplied by the allotment premium, which is rupees 2 per share, 1,600 rupees. As per the working note, the amount which you received from G1 is 1,900 rupees excluding the premium, and the allotment money not paid by G1 including premium if any is 3,700 rupees. So the total of the debit is 5,600 and the total of the credit is also 5,600 rupees. We'll move on to the sixth entry, which is to make the final call money due, equity, share, first and final call account debit to equity, share, capital account to securities premium reserve account. This is for the final call money due on the total number of shares which has been issued is 3,20,000 shares, and we forfeited G1's 800 shares. So the final call money will be made due on 3,19,200 equity shares. Against equity share capital, it's 3,19,200 shares multiplied by the amount of final call money towards the share capital is rupees 5 per share. Again, security premium reserve, it's 3,19,200 shares multiplied by the final call money towards the securities premium, it's rupees 2 per share. So the amount against securities premium reserve is 6,38,400. and the amount against equity share capital is 15,96,000 rupees, and the amount against equity share first and final call is 3,19,200 multiplied by 7 rupees per share, 22,34,400 rupees. We'll move on to the 7th entry for the receipt of the final call money. Bank account debit to equity share final call account for the final call money received. The amount against this is the amount of final call money which is totally due, which as per the previous entry is 22,34,400 minus the amount of final call money which is not paid by Ganesh. As per the working note, it is 16,800 rupees. So we arrive at 22,17,600 rupees. The next 8th entry, we will forfeit Ganesh 2,400 shares, equity share capital account debit, securities premium reserve account debit, to share forfeiture account, to equity share final call account. $2,400 shares of Ganesh forfeited for the non-payment of final call money. Against equity share capital account, the number of shares forfeited, which is 2,400 shares, multiplied by the amount which is called up to the time of the forfeiture, which is the full face value of the share, which is rupees 10 excluding the premium, comes up to 24,000 rupees. The premium amount not paid is 2,400 shares multiplied by rupees 2 per share premium payable on the final call, comes up to 4,800 rupees. Let's fill up the amount which is received from Ganesh. As per the working note, the amount which is received from Ganesh excluding any premium is 12,000 rupees. And the final call money which is not paid by Ganesh, including premium if any, is as per the working note 16,800 rupees. The total of the debit column is 28,800 and the total of the credit is also 28,800 rupees. We forfeited Ganesh shares. We'll move on to reissue the shares. As per the question, out of the forfeited shares, 1,500 shares were reissued at 8 per share, fully paid up. So it's reissue at discount. Bank account debit, share forfeiture account, debit to equity, share capital account. $1,500 shares reissued at rupees 8 per share, fully paid up. Against equity share capital, it's 1,500 shares multiplied by the paid up value, rupees 10, 15,000 rupees. Again, share forfeiture, 1,500 shares multiplied by the discount of rupees 2 per share, 3,000 rupees. And the amount against bank account is 1,500 shares multiplied by rupees 8 per share. The reissue price comes up to 12,000 rupees. The final journal entry, the 10th entry, is to transfer the gain on reissue of the shares to capital reserve. Share forfeiture account debit to capital reserve account. For the gain on the reissue of shares forfeited, transferred to capital reserve. Let's do the working notes for calculation of gain on the reissue of shares. Working note. We need to arrive at the amount received from the defaulting shareholder on the 1,500 shares reissued minus the discount on reissue. Now the 1,500 shares which were reissued includes 800 shares of G1 because it includes all the forfeited shares of G1, and the balance is the shares of Ganesh. So the difference between 1,500 and 800 is 700 shares of Ganesh. So we need to arrive at the amount received from 800 shares of G1 plus the amount received from 700 shares of Ganesh minus the discount on reissue. We can take the amount from the reissue journal entry. The discount on reissue is the amount against the share forfeiture account. The reissue journal entry, 3,000 rupees. So minus 3,000 rupees. So let's go to our working notes to find out how much we've received from the 800 shares of G1. Now, as per the working note, the amount which is paid by G1 excluding the premium is 1900 rupees. So 1900 plus we need to find out the amount which is received from Ganesh's 700 shares. So we need to do a calculation. Now the amount received from Ganesh 2400 shares is rupees 12,000. So let's find out the amount which is received from Ganesh 700 shares. The amount is equal to 700 multiplied by 12,000 divided by 2400. Comes up to rupees 3,500. So we will add 3,500 over here and deduct the 3,000 rupees. The final figure is rupees 2,400. So the gain on the reissue to be transferred to capital reserve is 2,400 rupees. We will insert it in the journal entry. All the entries are done. We will remove the split and view the full answer. This is the example sum at the top. It's followed by the working notes. The first working note is the 9-column table. The second working note is all the details with respect to G1's 800 shares. And the last working note, details with respect to 2,700 shares applied by Ganesh. This is the solution, the journal entries, the first screen. The second screen. The third screen. And the final screen.